How much tax can you actually get back from tax depreciation? Let's use a real life example. This is Anthony. Hey everyone, Tuan, founder of Duo Tax Quantity Surveyors here for another video designed to help you become a better property investor. So you've bought an investment property and your accountant's telling you that you can potentially claim thousands and thousands of dollars in tax depreciation on it. But what does that even mean? Does it mean that if you claim $5,000 worth of depreciation that you'll get $5,000 back? No, although I wish. For the average investor, figuring out these numbers, tax concepts, and strange terms like effective life and depreciation rates are all gibberish. And it's not your fault. The ATO does a pretty bad job of it, and unless you ask your accountant, chances are you'll be clawing out your eyes trying to figure out this stuff on your own. Tax brackets, what the hell are those? So I want to explain to you how tax depreciation can help you save on tax and why it's the second largest tax deduction you can claim. But first, I want to point out that this video is intended for general guidance and shouldn't be used for tax or financial advice. We always recommend you engage a qualified accountant to assess your individual situation. Now let's get into it. So first things first, we need to explain what tax depreciation is. This is basically the wear and tear on an asset such as your fridge, washing machine, or parts of the building structure in your home that loses value over time. For example, buying a fridge in 2018 for $3,000 won't be worth $3,000 now. This difference is what's called tax depreciation. And the government allows you to claim this loss in value on your tax return each year. Now let's use a real life example. This is Anthony. Anthony earns $80,000 a year from his job. He bought an investment property at the start of the financial year and is currently renting it out to make $500 per week in rental income. Let's assume that Anthony isn't making any money anywhere else. That would mean he's making $80,000 from his job and $26,000 a year from his investment property. That's a total of $106,000. All of this income will now also need to be included when you or your accountant does your tax return. This is what the ATO calls assessable income. In Australia, your assessable income gets taxed progressively. This means the more money you earn, the more money you get taxed. In Anthony's case, he'd be paying around $24,917 at a marginal tax rate of 32.5%. Now don't get bogged down about what these rates are and what the final figure is. The point is, Anthony needs to pay a pretty significant amount in tax. So the next question is, how does tax depreciation help you with saving this? Now, Anthony's come to Duo Tax and engaged us to survey his investment property for tax depreciation. We liaised with his property manager and sent one of our quantity surveyors to begin preparing a tax depreciation schedule report. We went in and reviewed what assets were in the property, how much depreciation he had occurred, and how much he can actually claim. You can check out our other videos on Division 40 and Division 43 to see what kind of assets these are. The result is that in this schedule, we were able to help him claim $7,500 per year in tax depreciation. What happens next is that Anthony would claim this $7,500 against the $106,000 income he had made, and this lowers his assessable income down to $98,500. What does that mean in terms of how much tax he pays? He ends up only paying $22,479. That's a tax saving of $2,438. Do you now see the power of how much tax money you can save with tax depreciation? And the beauty of it is, this is only in the first year alone. Depending on certain assets, you can enjoy the benefits of tax depreciation for years to come. Potentially all the way up to 40 years for brand new properties. Thanks very much, Anthony. So there you go, guys. I hope that's given you a great understanding of how tax depreciation benefits you as a property investor. If you know a friend, colleague, or family member that needs to hear this, please make sure you share this video with them. If you got a lot of value out of this video, check out our YouTube channel to subscribe for more. And make sure you click on the bell icon so that you get notified for the next video. I'm Tuan from Duo Tax. I'll see you next time.